I ain't gonna tell y'all that I've been sitting here talking for how does IG tell me how long I've been talking? For the last 3 minutes. It says 3 minutes and 10. Oh, that's cool. If I hold my finger up there, it says 3 minutes and 22 seconds. I hit that freaking button on this thing, right? Let me show y'all, man. Let me show y'all, right? On this thing, right? This is what the screen looks like, right? If you notice up here, right? When I get ready to go live, you have to do everything twice. Like if I hit end broadcast, right? If I click end broadcast, see it pops up again. And I got to, you know what I'm saying? I got to click it, right? So it's a button that says go live. So what I do, I come over here to brand, right? And I hit the thing and it starts playing that. And then I come up here to go live and I hit it. And then you got to come down here and hit it again. When I'm rushing, I be forgetting to hit it that second time. And what let me know what nobody on it. See, like right here, I can see is 10 people on there. I happen to look, I'm sitting up there talking, and I happen to look back at the screen and it said scheduled up here. When it says, I said scheduled? What? I'm not live? Man, I've been talking for 3 minutes to myself. What's going on, everybody? What's up here, Learning Chef? Father Legends, you ain't know nothing. What's going on, FC? What's up, Will? What's going on, Tranisha? How's everybody doing this evening? Shout out everybody that's in the chat. What's up, Kim? How you doing, Kim? Shout out everybody that's in the chat. Shout out everybody that's pulling up. This evening, I don't think I got to worry about separating the wheat from the tare this evening. We're gonna go ahead and get right into it. As you see, I still got the ES pulled up from this afternoon when I was in here, you know, doing some afternoon trading. We're gonna go ahead and change this over to daily candles. We're gonna squanch the dollar down, and we're gonna go over here and holler at our homegirl Spilene. If you don't know who Spilene is the SPY. If you look over here, you see SPY. That is the ETF that tracks the performance of the S&P 500. Around here, we call it Spilene. Oh, wait a minute. I truly jollipies. Good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, when I really doubt that it is, I still want to say welcome and give you a nice hearty, well, thank you for always hanging out with me every single day. The homie back here, Spidey, every single day. My sweetie over here in the corner every single day. If you don't know who I am, my name is Timothy Lee Rogers. I get on Algo's Internet and I go live twice a day. Once 9 a.m. Eastern Time, once at 6:30 p.m. Eastern Time. Talk about the price action to help someone like you get your aha moment when it comes to trading, investing, all things stock market. But these days, I tend to focus on day trading. But everything I do, that was funny to my son. Everything I do can be applied to any. Nice. Appreciate this. Tranisha, how are you commenting in the Discord when you're supposed to be looking at the YouTube video? How? There is no way for you to focus on two different things unless your eyes cocked like a pistol. I'd have lost my train of thought. I don't know where I am. Like, comment, subscribe. Thank you, thank you, thank you. Let's get into it, man. We're going to go over here and holler at Spalene. If you know the song, sing it with me. If you don't know the song, it's real simple. Hang out today and then come back tomorrow and sing it with me. Spalene, Spalene, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Let me move that so I can see what you about to do. Ooh, Spalene. Spalene, Spalene, what you doing? Spalene came down today. Came down today. Reversed. Came all the way back up. Then we closed above yesterday's close. Yesterday's low was at 395.56. And today we closed at 395.60. So we closed above yesterday's low after taking out the sell side liquidity. And then it puts us right back. We closed near the weekly equilibrium. That will be last Wednesday's high and last Friday's, wait a minute. Yep. Last Wednesday's high and last Friday's low. That right there would be equilibrium for last week's dealing range. Also, what else dost thou seeth? Let's see if anybody else can see something that we closed above on the SPY. If we look to the left, I'm going to turn my head like this. I'm going to look away, right? While y'all look to the left, it's somewhere over in this area. Can anyone spot what we closed above? It's somewhere over here. Can anyone spot what we closed above today after going down below and then coming back? It's something over here. Can someone put it in the chat if they notice anything that we went down below and then closed above? Anybody? 15 seconds has gone by. My neck is getting a crook in it now. Does anybody know? That's a long 15 seconds. There's a lot of people on here. Someone should be typing. Oh my goodness. Oh my goodness. What in the haberdashery and hemoglobin is going on in the chat today? Everybody keyboard broke? Is everybody Let me go look and see how much of a delay that it is. Let me pull up the tube. How much of a delay is it? Are we dealing with? Let me see. Let's pull up the tube. Hoof curvature has led to a significant white line lesion. I ain't getting nothing in the chat. I'm going to start looking at cow feet. Hi. Nothing in the chat. Nothing in the chat. 1, 2, 4, 5, 6, 7, 8, 9 seconds. 9 seconds. And nobody answered. Nobody answered. Let's move on. We ain't getting no participation tonight. I'm sad now. We're going to make this quick. There's a liquidity void right here. Right there. There's a liquidity void right there. Have no price trading in there. We traded down through it, traded up through it, up and down through it, pushed back up through it here, right? Came back down, sat on top of it, using it as support, wicked all the way through it both ways, pew, pew, right there. So now we're treating it as support. When we get below PD arrays, You cannot say that out loud. What did I say out loud? Don't be trying to write down something after I start saying it. Look at my sweetie following suit. Trying to write down something after I start saying it. Get off my live. Delete that. Let's go to the ES and go through the price action since it don't nobody want to participate. Don't nobody want to participate. Everybody want to act like everybody want to act like we just gonna go through the price action and not just talk about anything else. That's it. Earlier today, I was looking at the dollar and the ES, and I was looking at how they were moving together, how they, the divergence and all the kind of stuff like that. These are weekly candles. We're gonna get into the price action. I typed before you said it. Check it. No. Because when I looked at the chat, there was nothing in the chat. And I said, there's a liquidity void over here. And then all of a sudden, there was. Let's go back to the tape. Let's go back to. Don't try to help her.
it was in there before. It was typed and you said it. You confirmed it. Then I typed it.
Oh, the chat don't go back.
The chat don't go back.
The chat don't go back.
And she said you can't say the moo.
Oh yeah. Okay. What I was saying, right? My sweetie trying to help you out, but I still don't believe you. Hey, what I was saying, these are weekly candles. Y'all remember the other day when I sent out the I posted on, I think I posted it on, I don't know if I posted it on Twitter, but I know I shared it in the Discord. And I don't know if I shared it on Twitter, but I shared this right here. The quarterly shift. Right? These are weekly candles, right? The DXY not making higher weekly highs. The E to the S is making lower weekly lows. The N to the Q is not making lower weekly lows. The Y to the M is making lower weekly lows. That is divergence. Can this be the quarterly shift? For those who don't know what the quarterly shift is, right? Every 3 to 4 months, this is something that I learned from Michael J. Huddleston, aka ICT. Every 3 to 4 months, the market goes through what he calls a quarterly shift, where if the market has been going up, it will get a quarterly shift and start going down. 3 to 4 months later, it will get a quarterly shift and start going up. How far up? How far down? Who knows? And who cares? We're not bulls. We're not bears. We're beasts. So we don't care how far it goes. We just trade what we see. And when it reaches premium and discount PD arrays, we act accordingly. We either shave, close positions, or enter positions. That's all we do. So, back in the month of October, we got the quarterly shift, right? It's around this area right here. I'm not going to go and pull up all the other because we talked about it a million times, right? So when we got the quarterly shift back in October, right, we took out the summer low, made a new low in the fall, got the quarterly shift because one of them, the Dow was not making lower lows right here, just like you see the dollar is not making higher highs right there at the same time. That's divergence, right? So once we got the confirmation to the upside, the Dow took off. Bang! The Dow was gone. Came all the way over here and took out the August highs, right? The Dow was, nothing could stop me. I'm all the way up, right? Fast forward to 3 to 4 months later, right? We started seeing a quarterly shift around December, January, right? October, November, December, January, 3 months. 3 months. Started seeing a quarterly shift. Once we saw a quarterly shift, right? See, right, we started seeing the shift around this time, December, January, right? Then when January hit, the Dow started going down. The ES and the NQ had one more final pop up in January. Then at the end of January, they started coming down too, right? So December, January, we got the quarterly shift. January, February, March. Now we're coming into April, right? So just say end of December to the end of March, 3 months, right? Get over here, Tim. I'm holding up my hand, can't see it. 3 months later, now we're starting to see it again. Is this the quarterly shift? So I was looking at this on the ES in the dollar. I was just looking at weekly candles, right? I said, hey, I noticed that it looked like the dollar was attacking the equilibrium, consequent encroachment, midway, whatever you want to call it, on this weekly wick. And I said, man, it don't even look like the ES has gotten to the weekly wick, right? Up here. What is this down here? I don't know what candle this is. This is a different candle right there. I don't know what candle that is. I got to go look and see, right? But, right? So that's his weekly wick up there, right? I got to figure out what this is for. I got that marked as a weekly, so probably supposed to be like that. Yes, that's the downside, right? So downside, it ain't trying to go nowhere near the downside, right? And it was moving toward the upside, right? All while the dollar has attacked the downside, consequent encroachment of that wick, and closed below it, right? Not only did it close below it, it filled in this fair value gap and closed right at the low of that fair value gap. Broke below consequent encroachment, right? Filled in and closed at the low of that fair value gap, right? Looking extremely bearish, just looking heavy. These are weekly candles. This week ain't over with yet, but just looking heavy, right? Just looking heavy. I just want to point that out. It's looking very heavy. It's looking very heavy. It's looking very heavy. Now, looking at the daily candles, right? When you start looking at stuff, let me scoot over, man. I'm all out. Y'all tell me I'm all out the screen, man. When you start looking at stuff on the higher time frames, it start to play out on the lower time frames, right? So looking at the daily, the dollar looking heavy on the weekly, right? Looking at the daily for the dollar and the ES, right? So the dollar has gone up and taken out buy side. Why does it always come out dotted like that? I don't want it to come out dotted like that. I want it to come out like that. There you go. Okay, so we went up, took our buy side, right? Took our buy side on the dollar, came down, breaking market structure on the dollar. Right? Fair value gap, retrace. Bearish fair value gap, retrace on the dollar. Right? Dropped it like it's hot, came down, filled in this daily fair value gap. Right? Came all the way down, filled in this daily fair value gap, pushed back up, and closed right at the low of the weekly fair value gap. Right? So that's what the dollar has done. That's what the dollar has done did. Let's make this one purpley so we can see the difference. So we can see the difference in them. Right? And then there's a volume imbalance down here. So there's everything going on with the dollar right now. Dollar, 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 dollar. Daily volume imbalance. Okay, so that's the dollar. Dollar looking heavy, looking very heavy. We had a breaking market structure. Fair value got retraced, came down, had another breaking market structure. Did not feel this, right? Did not feel. Oh, that's two. So let's check this out. So we have 1, 2, 3 fair value gaps. 3 fair value gaps on the dollar, right? We made 3. Let me change the colors of these. I should have did that beforehand. We're going to make these there you go. Okay, so now looking at the dollar, these are daily candles on the dollar, right? Daily candlation. Daily candlation. We've come down, breaking market structure, fair value gap retrace, right? On the dollar, right? Technically, you can say that this is a breaker right here. Technically, you can say that's a breaker right there because we came here, we came down, pushed up. That's inside the consolidation. So I don't like to look for stuff in the consolidation like that. But technically, you can say that it is, right? But fair value got retraced, came down, another breaking market structure. On this breaking market structure, we created 1, right? 1, 2, 3 fair value gaps, right? Now, we pushed up and we did not come back to this fair value gap right here or this fair value gap, right? When we have overlapping, well, consecutive fair value gaps right there after, you know what I'm saying, making a move, breaking market structure, fair value gap retrace, and then take off, right? This first one, that would be a breakaway gap, right? This right here, we would assume that that right there could be a measuring gap, right? We can assume it can be a measuring gap, and then this right here is just another fair value gap there. Why can we assume that can be a measuring gap? Because the measuring gap, if it's a measuring gap, wherever we anticipate price going to, like this sell side liquidity tie down there, the measuring gap should be about around 50% away from where we expect it to go. So let's see. Let's see if it's there. So we're going to come from the high where we took off from, and we're going to pull this down. We're going to put the 50% there. That right there is down to the order block. It's not down to the low. It's not down to the low. This one is 50% away right there. Right? So maybe that can be the measuring gap. But if I'm not mistaken, it's the breakaway gap, the measuring gap. No, it was three. It was the breakaway gap, the something, then the measuring gap. The breakaway gap, was it propulsion, then measuring? What was the one in the middle? I can't remember. I would have to go back and look. Because if this, like we expecting it to go there, and then this fair value gap is falling at the 50% range, right? I know the measuring gap used to be 50% away. What was that second one? Breakaway gap, something gap, measuring gap. Can't remember what it is. But anyway, all the way down to there, right here where we're consolidating at, that puts that gap right there, right at that consolidation. And if we stretched it from the high and put the what's name at that consolidation, that puts us down at that low using the TLR field projection, right? Can't remember the whole thing about the measuring gap, but I do know, just say if this is the measuring gap, you do something with coming from the high and go to the high of the gap, right? And then you put your projections on. You put your projections on. Right? And then something. But that's, I think that'll be the measuring gap there. Because the measuring gap be 50% away. Right? The measuring gap be 50% away. If that's the measuring gap, you go to the high of the measuring gap, and then the downside target would be right around here, and that would be at that low, right? Because I know the measuring gap is 50% away. I can't remember what that gap is there. So boom, if that's a measuring gap, that's the low you expected to get to. Just like I said with the TLR fib extension, if we expect it to come down here, boom, that puts us right there at the consolidation where the dollar is consolidating now. So with all of that being said, now that we've saw where the dollar can potentially go, right? Coming toward these lows, showing the divergence, the quarterly shift, right? Now on the daily for the ES has come down and made a low and started to break up to the upside, right? And we're consolidating in an area. Put that there. Put that there for a second. Stretch this up to the 50th percentile right there. We just go to this counter right here, right? Put that there for a second. Let's find what's the middle of all of that. Go from the highest high to the lowest low in there. We'll put it right there in the middle. Hey, right there where we closed at today. Right there where we closed at today. How about that? There you go. And we can go up and potentially attack. We get that puts us at this order block right here. And if you look over there, that's right in line with the low that the dollar is heading toward. So with the artificial projection, it puts us right at the same consolidation, right in the same low that the dollar should be attacking. So if all is well in the world and it starts to push down and push up together, the dollar should attack that low and the ES should attack these highs. So that right there makes everything make sense in the world if this is the quarterly shift. Does that bode well for everyone that wants the market to die right now? Probably don't. But I don't care. You know why? Because I'm not a bull or a bear. I'm a freaking beast. Now move out of the way, dollar. Let's go down here and look at, we're going to go to these 5-minute candles. And we're going to talk about this. Man, look at that run up at the end of the day. Look at that end of the day run up. Look at that. Speaking of the end of the day run up, did anybody see the video that I shared on Twitter and Discord? Oh yeah, forgot to say that. By the way, I shared a video in the Discord right here. This video right here. It's me talking over a trade that I took this afternoon. If you want to see the video, go to my Twitter page and check it out if you're not in the Discord. I'm not going to go back through it now. I shared it on Twitter. Go to the Twitter page and look at it on the Twitter page if you want to see the video. It's just me talking through a trade that I took this afternoon. And it just as a way to encourage everybody just to say, hey, if you're not all the way there with ICT concepts yet, if you're still struggling with it, if you don't believe in it, if you don't know it worked for you, if you don't know if you'll be able to do it, just a little encouragement to let you know that if this simple dude from Fort Lauderdale, Florida can do it, anybody can do it. Only thing you got to do, study, put in the work, and then show up every day. It'll be like my entry wasn't as clean, but I caught 5. Speaking of, my entry wasn't even like clean. I took some heat. I took some heat on it. It wasn't even spot on. I took some heat on it because it was a little downside risk, but all of the downside risk was within my 1-to-1 5-point stop loss, 5-point target. It was all within it, so I didn't care, and I wasn't worried about it going back. So it wasn't like super duper like clean. It was like, I took some heat. Like if you look at the video and see like how much heat that I took right there, then I think it came down again right there. All right. If you look down there, see, I took some heat. I came down, I took some heat. How many points was that at the lowest point? So at the lowest point, like roughly 2 points of heat. At the lowest point, roughly 2 points of heat, right? Because I got in here on this candle right there. Got in on this candle right here at this fair value gap right there at the breaking market structure, right? Went up, pulled back, right? Came back down, right? It eventually came all the way back down into this order block down here, right? So it was some downside risk. We had some equal lows there. We had a fair value gap down here that I was anticipating being a breakaway gap, right? I was anticipating that being a breakaway gap because we came up. We didn't trade back to it, right? We did not trade back to it, did not even get an institutional order flow entry drill, and then we took off again. So I was anticipating this being a breakaway gap. So when I took the trade there and we was below that breakaway gap, I was like, hey, we good. You know what I'm saying? We good. My 5 to 5. I didn't even try to move the stop because I was like, I'm just leaving it as is. I know it's not going back down there, so ain't no need for me to try to take off, you know what I'm saying, lessen the risk. But I took two points of heat. So it wasn't like the cleanest entry. Where did you get in? I got in at 39.66 even. I got in at 39.66 even, and I think I ended up getting stopped out at like 39.90. It was like 6 points. 39.86. I mean, I got in at 39.86 and I got out at 39.92.50. 92.25. Yeah, I got out at 39.92.25 right there. Then I got stopped out right there. Right. I got stopped out right there at 39.92.25. Because once it started like moving and accelerating, I started pushing it up to like different targets. Right. I had my 5 point set there. And then once it started moving, I noticed this volume imbalance up here. Right. Once we started like really moving past this high, then I scooted it up to that volume imbalance right there. Right. And then I said, if we start blasting above this volume imbalance, I'm going to lock in more than the 5 points and then push my target up higher to the swing high and see how far it go. Right. So once we got it to, you know what I'm saying, really moving, right? Right there when we blast off, I pushed it up, locked in 6 points, 6.25, and then got stopped out at the 6.25 right there. So, but yeah, so it wasn't like the cleanest entry, but it was calculated. It was calculated. 9:30. All right, put it there. 4 o'clock. Okay, so this right here is the New York price action. This is the New York price action. All right, so looking at New York price action, right? So at 9:30 when we opened up, we pushed up and we took out the buy side liquidity, right? Pushed up, took out the buy side liquidity on the 10-15 candle. That'll be the 10-20 candle on Ninja Trader. So we pushed up, took out the buy side liquidity, came down, immediately took out the sell side liquidity. Huge SIBI right here. Huge SIBI, right? So we got 1 SIBI, 2 SIBI, 3 SIBI, U SIBI, 1 SIBI, 2 SIBI, 3 SIBI, U SIBI. We'll stretch that out all the way to the end of the day. All the way to the end of the day. All the way to the end of the day. Let's change the color of the background. Make it orange. Make it orange. Orange. Make it orange. Orange. 1 SIBI, 2 SIBI, U SIBI, who SIBI, 1 SIBI, 2 SIBI, right? So we came down, heavy distribution to the downside. 1 SIBI, 2 SIBI, took out. Let me change this to green because that's buy side liquidity. That's buy side liquidity, right? And then we came down and took out sell side liquidity. Sell side liquidity. What did we leave in the wake? What did we leave in the wake? 1 SIBI, 2 SIBI. What else did we leave in the wake? What else did we leave in the wake? Breaker, breaker, 1-9er. Breaker, breaker, 1-9er. Breaker, breaker, 1-9er. Breaker, breaker, 1-9er. Right? Left it in the wake. Came up. Took out buy side liquidity. Came down. Blast off. Took out buy side liquidity. Came down. Took out sell side. Breaker. Breaker 1-9. Right? Price trades back up. All the way back up to where? The top. Imbalance. Wick up above it a little bit. Let's go to the 1 minute to see where do we go. Let's go to the 1 minute to see where do we go. 1 minute. Breaker, breaker, 1-9er. Breaker. Look at that. Well, look at that. We came all the way back up and went wick for wick with a 1 minute fair value gap and a 1 minute fair value gap is where we came to, right? Oh, look what else we left in the wake. Look what else we left in the wake. This low took out that high. Breaker, breaker, 1-9er. Breaker, breaker, 1-9er. 1 minute breaker. 1 minute fair value gap. Came all the way back up. Wick for wick with the 1 minute fair value gap and the 1 minute breaker. Then we peeled off. Did we get to the quarter? Did we get to the quarter of the breaker? Let's see. Let's see if we got to the quarter of the breaker. Quads. Let's go ahead and extend this out to the right. Oh, so close to the quad. So close to the quad. Oh, no, that is the quad. Right there. It says the quad is 4,650. We came to 4,650. Right there. 4,650. The red line. So came to the quad, came to the fair value gap, wick for wick. Quad of the breaker. Breaker, breaker, 1-9er. Right? And then we came back down. Let me go back to 5 minute count. I'll leave it on 1 minute candles. Right? I'll put it on 5 minute candles because I can't get the whole day in. So we went all the way up to 1 minute, to a 1 minute zone. Right? Zone, 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 zone. Right? We came down, pushed back up, kissed the bottom of the 1 minute, breaker, breaker, 1-9er, right to the bottom of the breaker on the 1 minute breaker. Came back down, melting down, breaking market structure right here on the 5 minute. Right? Breaking market structure right there on the 5 minute. 1 minute fair value, 5 minute fair value gap right there. Push back up. Did not even get a institutional order flow entry drill. Breakaway gap. Breakaway gap. Didn't even get an institutional order flow entry drill. Breakaway gap. Didn't even get an institutional order flow entry drill. Push down. Right? Came down. Consolidate, consolidate, consolidate. Pop down below the consolidation. Consolidate, 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 consolidate. This all during lunchtime right here. Lunchtime consolidation. Lunchtime consolidation. And what do we get after lunch? We got a continuation to the downside. We did not get a lunchtime retracement. Right? We did not get a lunchtime retracement. Why not? Because we got the retracement before lunch from 10:30 up until lunch, we got the protractionary state. We got the protraction before lunch, right? From 10:30 until lunch, we retraced back up. We got the protraction, aka the Judas swing, right? So we pushed back up. Where's the midnight open? Let's check that. Let's check the midnight open real quick. Where is the midnight open? Nope, we didn't get back up to it. Didn't get back up to the midnight open. Let's check the London open. Where's the London open? Nope, we didn't get back to it. We didn't get back to it. Where is the New York open? New York open? Yep, we went back above it. We went back above it. Yep, above the New York open, then drop. There are several opens you can check for the Judas swing, right? The Judas swing, the protraction, midnight open, New York open, London open. Depending on what time frame you're in, depends on how far away the other one is. You can look for it to be, it's going to go back above or below opening price. Which opening price? You got 3 ones you can check: midnight, London, and New York. In this case, it didn't make it to midnight or London, but it got back above the New York open. All right, came down, traded above New York open to a premium PD array, and then dropped it like it's hot. Came back down, took out sell side liquidity, right? Blast through, taking out the sell side liquidity, right? Offering buy side and sell side. Market makes the move, blasting away from it, letting you know that what? Everything from this candle back this way, up this way, letting you know that all of that is a balanced price range. How do you know that? Because we offered buy side, we offered sell side, right? And then we quickly left that area after consolidating for a bit. Pang! Left it. So now everything from this 1325 candle, that'll be the 1330 candle, over this way, inside this range right here, from this high down to this low right there, all of that is a balanced price range now, right? So we come back, take out the buy side, the sell side liquidity. Once again, come here, let me borrow you. Yes, you can borrow me, Tim. Right. Take out the sell side liquidity, push down, push back up, melt down, melt down, melt down. Now, once we get into a liquidity pool, and we start to swimming in the liquidity pool, what are we looking for? We're looking for the market to tip its hand, right? We're looking for the market to tip its hand. How does the market tip its hand? All right, look here. From this 240 candle. From this 240 candle, look at that. What is that right there? Took off, right? What do we do? So when we take off from here, we were in the liquidity pool, offering buy side, offering sell side, offering buy side, offering buy side, offering sell side, offering buy side. And then we left that burger back there, letting us know that's balanced. Offered buy side, offered sell side. Right now. So now, again, we got a balanced price range in here, right? Coming from this candle over this way. All of that's balanced out, right? So we're going to include the highs of the highs inside that range, right? We're including the highs of the highs. So everything in there is a balanced price range, right? When we get the pang out, right? What do we leave in the wake of that balanced price range, right? We have a bullish fair value gizzle. We got a bullish fair value gizzle. We left that in the wake, right? Right there. got a bullish fair value gap right there. So take off. We got an order block over here too. You know, you can come over here and try to dig through and try to find a mitigation block. But again, that's inside the consolidation. It's too much looking over there, right? It's balanced. We don't expect price to come back down here because we just took out sell side liquidity. We took out sell side, consolidated for a really long time, and then got the bang out. So there's no need for price to come back down here right now. There's no need, right? So when we come back down into this imbalance, right? Come down into this imbalance right here, right? We come down, we get into, we came right here. See this wick right here? We came right there to that wick right there on that candle there, right? Right there inside this wick here. This candle right here, this is the last candle before that, before the pang out, right? That's the high of the candle. This one right here. All of these are trading both ways. So all this is offered buy side and sell side on top of all of these candles right here, right? So we come back down into the imbalance and then we reversify, right? We reversify. And then once we reversify, we push up and we almost get to the high, right? But we don't. We stop, right? And we leave a down close candle right here, right? We push back down, come into, right, this down close candle right here, right? And then we do what? Nothing can stop me. I'm all the way up, right? And what do we leave in the wake? We left a whole lot in the wake. We got breaker 19, got order block, got a bullish fair value gap, got another bullish fair value gap. That's the price action on for the day. That's price action on for the day. Hopefully I was able to walk through it, make it clear. I stayed on here a very long time. Not sure why, but I can't hear anything. Okay, I'll go and turn it off then. Probably caught the battery dying. How do I get in the Discord? You tell them people that don't be checking nothing. I appreciate you though. I appreciate you. Do anybody got any questions before I get out of here? Good. Good thing you said you weren't going to go through the entire video. I didn't go through the whole video. How about that? How about that? I didn't go through the whole video. How about that? Where did you get in? Saw that. Oh, I don't see anything. Nobody saying anything. Go ahead and call it. Delete that off. Delete that off. I can leave that there. I see great information. Thanks over here, but I don't see anything over here. There it is. Great information. Thanks. Claps over there. Oh, yeah, it's crazy delayed. I see my sweetie clapping over here. They go to claps just showed up. Yeah, it's a little bit delayed. But it ain't that much delayed. You hear me? All right. Again, I just like to try to encourage everyone. StreamYard is 8-second delay. Thank you, Captain Obvious. I just want to be encouraged. I want to encourage everyone that if you do the work, so many opportunities when you can read price action that clearly. Again, Lil Hawk, everybody else that's in here, anybody that's watching it on the replay, if you do the work, right? If you do the work, if you go through, like me, I want to know everything. So I went through the core content. The core content was like manna from heaven for me. I'm not that person that just want to know one thing. I need to know the why behind everything. If I can understand the why behind it and I can make it make sense in my mind, I can do anything. So when ICT released the core content, that was like manna from heaven. All I had to do was just go to sleep in my tent and wake up, and the next day my food was gonna be there. All of the different concepts just on a silver platter. And then you just have to understand all those concepts mean nothing if you don't know that it's about time and price. What time of day is it? And what has price done and hasn't done yet? If you can hone in on what time of day is it, are the algos algoing right now? That's all. That's all the time is. Are the algos algoing right now? If the algos are algoing, when do the algos algo? During the London, during the New York. That's when the algos algo. They probably algo during the Asian too, but hey, I don't trade the Asian, so I don't care. But it's certain windows when the algos go crazy. Certain windows. When the London first kick off, they go crazy. What candles are they paying attention to when the London kick off? Right? The first area you want to zone in on is from the midnight open. From the midnight open up until the London open. Right? What has price done in that window that the London algos are going to attack? Then when you're getting ready to go into the New York session, it's an area of manipulation in there when they typically release news around 8:30. So what is the algo going to attack around that manipulation time? What did it do during the London? What did it do from midnight up until the London? Did the London accomplish something that needs to be finished with the manipulation? Did the London not accomplish something from midnight that needs to be accomplished with the manipulation? What has price done time and what has price done and not done? New York. What is the New York algos looking for? What it did between midnight, London, and manipulation? Is it something that has been completed and needs to continue? Is it something that hasn't been completed yet and needs to be done? During the New York, you got macros that run every hour. What is it looking for? What's been going on the time before it? What needs to be completed? Who needs to be punished? Who need time and price? It don't matter how many PD arrays you can quote if you don't understand what the algo is doing at a specific time based off the price action. That no bueno. That no bueno at all. Got to know the why behind what's going on. I want to know everything. I want to just be able to read candles while I'm in the trade. I don't want my duty hole getting tight while I'm in the trade. What makes you pucker up? What gives you the pucker factor? Because you don't know if your stop is resting below a balanced price range. You don't know if your stop is resting below a PD array that the market, that the algo does not want to attack right now. You don't know that your stop is resting in a safe place. You got to stop there because ain't nothing guaranteed. But when you do the work and you know that you can trust, when the algo tips his hand and says, I'm leaving this area and I'm not coming back until I do something else. As long as that something else is farther away than your profit target, the majority of the time, you are going to be safe. And I'm willing to go out on a limb to say every time that you're not safe, you did something wrong. You didn't take into account the downside risk. You entered at a spot where your max stop wasn't put in a safe spot. You did something wrong because the techniques work. The techniques work. And if you do the work, you too will be able to sit down and read, just like Michael J. Huddleston. Remember at the beginning of the year when I said, man, I'm going to be able to read these candles just like ICT. And I can say, I can read these candles pretty doggone good. Now, I may not know all of the little secrets that he haven't shared with us yet, but when it comes to everything that I already know, it's like every day I'm astonished by my accuracy and my precision. I'm talking about my shot group like this. My shot group like this. What was your approach to watching the videos? Watch a video and go to the charts, watch and take notes. I watched them 900 million times, right? Because I'm the kind of person where like I listen to books, I watch videos. Like if I could look at a video and listen to it, right? It absorbs into the wrinkles of my brain easier like that, right? So I watched them over and over and over and over until like I could see the slides in my head, right? And once I got to that point, then I started writing stuff down, right? I started writing it down. Once I like I just say, when I started looking at the videos, right? I would watch one video like 4 days in a row. Like I would look at one video 4 days in a row, right? And just let everything soak into my brain. And then once everything starts soaking into my brain, then I would start writing it down because now I understand it. Now I understand it. And so when I start writing it down, right, it start making sense. Like when you start writing it, it start coming to life. Like when I use my hands and write, it's like everything in my head start coming to life, right? But I need to get it in my head first, because if I just take notes when I don't understand it, the notes just going to confuse me, because I need to be able to, like, the way I take notes, I write down what I know and how I understand it in the notes. So when I go back and look at it, I know exactly what I mean. But when I take down notes for stuff that I don't understand, I am lost. So shout out Tranisha, always pulling up with the hard hitting super chats. Tranisha, I appreciate you so much. I appreciate you so much. It's totally unnecessary, but I appreciate you so much. Shout out Tranisha, right? With the leprechaun hearts. So, I watch the videos and I look at each video and like I looked at each video a minimum of like 4 times, right? And if it was like super juicy, I would run that one back probably for about 2 weeks straight, right? And then once I really start like understanding it, then I'll start taking notes so I can write down the notes in the way that I understand it. So when I go back and look at my notes, they make sense. Now, I'm not the type of person that like to redo my notes. I got friends I went to college with where they would make notes, right? And then as they got a better understanding, they would rewrite their notes. They would have like sloppy notes and neat notes. That's not me. That's extra work, right? So you can either watch the video, do the sloppy notes, and watch the video. You know what I'm saying? Watch the video, then go back and do the neat notes. That's on you. But watch the video, get the understanding of it, however you get the understanding of it, and then watch the video while you're in front of the charts. Right? That's my approach. Like, so I'm not just looking at them like 4 days and like just say I might look at it the first 2 days, right? While I'm just watching it on my phone, watching it on TV, right? Then the next time I watch it, I'm sitting in front of the charts, right? And then when I watch it like that 4th day, then I'm starting to write down notes because I'm understanding it, I'm seeing it, it's making sense on my charts, and then now I'm taking notes, right? That's how I do it. I take notes, but I've been taking them the first time watching the video. I move to the next video. I need to rewatch and take your approach. I'm glad you said that. I'm glad you said that. My advice to anybody, right? My advice to anybody, do not move on to the next video until you completely understand that video you watching. If you try to move on to the next video just to rush through the information, you are doing yourself a great injustice. Because if you don't completely understand this piece right here, you're moving on unprepared for the think about it like this right here, right? I appreciate that, Sam. I'm not a legend. I'm just a regular dude from Fort Lauderdale, Florida. Look at it like this right here. When you go to any school, not just colleges, when you go to any school, right, you have to have a basic foundation of anything before moving on to the next level, right? Shout out power moves. I thought you was already in the spider game. Shout out power moves for signing up with the Black Spiders. I thought you was already in. Anyway, when you're say you want to take a class, right? When you go to school, they give you assessment tests so they can see what level you're on. Right? What level are you on? You're on this level, right? When you take, just say, when you get your course catalog, it's for any school, high school, college, anything, right? There's some classes like you can't just go take algebra 2 without having taken algebra 1, without being taken what you got to take before algebra. Geometry, is geometry before algebra or after? You got to have like basic math, right? When you go to college and they give you that assessment test, you're not even smart enough to get into algebra 1, they put you in like 3rd grade math, right? So, but before, right, you felt like you understood, but you was moving through too fast, right? I get that. I get that. And we getting some hard hitting discussion tonight. And I could talk about this because I lived it, right? We looking at it and we feel like Man, I got that. I understand it, right? Think about it like this right here. Do it like this. Do it like this right here. Right? Do it like this right here. The way ICT designed his mentorship, right, was for you to go through the entire mentorship in 1 year. And he himself said that that is too accelerated for anybody. He's cramming decades worth of knowledge into 1 year, into 12 months, decades of knowledge into 12 months, right? He's been doing it for over 30 years, and he started the mentorship back in 2016. So over 20 plus years when he first started into 1 year, right? So look at it like this right here. If you were to do the core content and pretend like it's on a drip course. If you don't know what drip courses are, when you sign up for courses on like Teachable and stuff like that, and Skillshare, they have some classes are set up, some courses are set up on what they call drip. And the drip is like it gives you, it unlocks content after a certain amount of time. So just say if you was on a drip course that was designed to go over a year, you may get a new module unlocked once a month. You got 12 modules, but it like month 1, the first one unlocks, right? Month 2, the second one unlocks. Month 3, the third one unlocks, and so on through the whole year. Go through the content as if it's on a drip course, right? Start at month 1 and take an entire month to go through month 1. However many, let's go to the what's the name? Let's go to the U of the tubes. I see Tizzle. Where you at? I see Tizzle. Playlist. Okay. Core content 2017, month 10, month 5. I see right here. This is month 1. Month 1 has 8 videos in it. All right. This is month 1. Month 1 has 8 videos in it. You got 1 month to do these 8 videos, right? For easy math, we're going to say every month, 30 days. Easy math. I don't care, 31, 32, 28, whatever. 30 divided by 8. Look at every video 3 times in month 1. Look at every video 3 times in month 1, right? Once a day. Every video 3 times, once a day, right? It's a 3.75. Can't get a 0.75, but you know what I'm saying? If you go 4 days, we're going to round up 4 days. Look at every video 4 times, 4 days, right? Once a day, look at every video in month 1, right? Give you a good time to understand exactly what you're talking about and go ahead and take notes. I don't care how bored you are of looking at those videos. Everyone, right? Month 2, 8 videos, same thing. Month 2, once a day, 4 days. Month 3, 8 videos. Month 4, 14 videos. Yes, I don't have to go in it. I can see the numbers. Month 4 has 14 videos. So month 1, 2, and 3, right? You're looking at every video once a day for 4 days, right? Every video once a day for 4 days each. So video 1, video 1, video 1, video 1, video 2, video 2, video 2, video 2. Go through it, right? Each video once a day. So you get to month 1, 2, 3, get to month 4. You got 14 videos. 14 divided by 30. No. 30 divided. Wait a minute. 30 divided by 14. Okay, 30 divided by 14. So 2 days. It's over 2, so we rounding up. Look at every video. Look at every video. At least 2 days, but we rounding up, so say 3, right? Look at every video in month 4, at least 2 days, but we're gonna round up and say 3. Every video 3, because I think month 4 is where it gets juicy. Yes. Interest rates, order blocks, mitigation. Yes. These all, these the PD arrays. Look at all them 4 days in a row. Look at all those 4 days in a row, right? You'll be able to shave off a little bit on the back end, because when you get down to month 11 and 12, when you get to month 11 and 12, like all of the real learning is gone. So you can shave off a little bit of time down there. By the time you get to month 11 and 12, you're going to be so far with it, you ain't got to worry about it. We got 18 videos in month 5. Do them 2 to 3 times a day. Then we back to the 8 videos again through month 9. You know what I'm saying? 3 to 4 times a day. By the time you get down here, you're getting better and better. So 3 to 4 times each video, right? And then month 10, you got 19 videos, right? Y'all get the picture. And when you get down here to because some of it he be talking about like bonds. You know what I'm saying? That's a lot of stuff that's important to know. And a lot of stuff he be talking about Forex and you know, it's like, see, like bonds trading. A lot of that stuff that's important to know how to they react to each other. But I don't really use the bonds like that. Like this right here, it was made back in a time when bonds was more prevalent to how the market moves. So like the bonds part of it, it ain't really necessary. So that's why I say you can shave off some time at the end, because a lot of the stuff is kind of like outdated in the sense of bonds don't weigh as much on the indexes like they used to. Bonds be not inversely correlated. You know, it's more about like the dollar. You know what I'm saying? So a lot of stuff you can shave off. But yes, that's how I say do it. What you say? Today was crazy. We went through a full market maker sell model to a deep discount. Yes, you're so right. I'm behind and I was trying to catch up. Don't worry about catching up. The market is not going anywhere. It's not going in. Michael J. Huddleston has been using these techniques for I don't know how long. He's been teaching people since 2016. Right here today in 2023, Lil Timmy Rogers is using the same techniques. The market is not going anywhere. Don't rush it. Perfect practice makes perfection. There you go. Repetition. I like your approach. I appreciate that. Super effective way is making the neurons in the body and brain, Tim, speak, wire and fire when absorbing new information. True story. That's what's up. I appreciate that. You know I can't say your name. I ain't even gonna try to say it. Them dreads go crazy though. My son got some dreads. I still pay attention to ZN. I ain't gonna hold you. I don't look at bonds like that no more. Because I only trade the ES. The only thing I look at is I pay attention. This is what I pay attention to, right? You can pay attention to whatever you want to pay attention to. This is just what Lil Timmy Rogers look at. And y'all see what I look at every day. I look at the ES because that's what I trade. I look at the NQ and the Dow because they are correlated. And I look at the dollar because it's inversely correlated, right? Them the only things I look at, right? I don't look at no indicators. I don't look at no nothing. The only thing I look at on like the macro level is when is the news dropping? When is it dropping? I could care less if it's good, bad, or indifferent. when is the news dropping? That's all I want to know. Once I know when the news dropping, right, I wait for the news to drop, see how they manipulate the market with the news, and then I say, okay, what's still left? Let's just say tomorrow some news dropped that manipulated the market and made the market move, right? I'm gonna leave it on 5-minute candles, right? Say tomorrow some news dropped and it manipulated the market that made the market move, right? So first it just say, give me an arrow, turn the snap off, right? I'm running my mouth now, baby. Let me know if I'm going too long. If I'm going too long and I need to get off, just say you need to get off. Say you need to get off. My sweetie still on here? Let's just say, where's my arrow? Say something dropped tomorrow, right? And the market don't like it, right? And we take off and we come down here like this. Boom. Right? Market come down there like that right there. Boom. Do that. Right? First thing a lot of people gonna do is say, oh my God, the market ain't like that. We tanking. We finna go down there and attack them October lows. I told y'all we was sliding. I told y'all this was a bull trap. Y'all done got sucked in. Y'all in trouble. You know what I'm gonna say? I'm gonna say, what did the market do? I'm gonna say, what did the market do? Right? The time frame matters not. I'm just looking at the candles. Right? I'm gonna say, what did the market do? All right. So market came down. We took out sell side. Right? We pushed back up. We did not take out buy side. Right? We did not take out buy side. Give me a green arrow. I mean a green line. Right? We did not take our buy side. The market pushed down. Right? So we've taken sell side. Right? Came down. We've taken sell side. We took sell side, pushed back up, didn't get back up there. Came down, took sell side, pushed back up, didn't take out buy side, pushed down, took out sell side, right? Pushed back up, didn't take out buy side. Right. We got relative equal highs up there. Pushed down, took out sell side. All right. So we've taken sell side 1, 2, 3, 4 times. Right. We've taken out sell side 4 times. Right. Left the buy side here. Left the buy side, relative equal high. So that's why I ain't putting down there. Right. Came down again. Right. Then this time we came back. Right. What do? We got a breaking market structure here. Right. Breaking market structure there. Early sign. When did that breaking market structure come? All right. Let's make this a different color. Nope, that's too close to that color. Right? Breaking market structure there, right? When did that breaking market structure come? Right? When did it come? After we consolidated. Right here. After we consolidated, soon as we came down, right? Right. And then you say, well, Tim, we consolidate over there, then we had a breaking market structure. But look at the difference, right? Let's peep the difference. I'm glad you said that. Look at the difference. We came over here, we consolidated, right? Consolidated, set equal highs, popped up above it, came down, took out lows again, right? Came back, consolidated a little bit more, pushed down below these lows over here, didn't take this low, right? Pushed up above there, didn't take that high, start to drop back off again, and immediately broke them lows, right? Now, look at over here. We came down, took out, never took the low again. Once we got this reaction here, never took the low again and went up and took out the buy side, right? Not only did we take out the buy side, we totally disrespected this PD array right here. Totally disrespected it, right? And once we got that breaking market structure, we came back down, right? Traded into this fair value gap, right? Stopped there, didn't go back down below this balanced price range, right? Didn't go back below that balanced price range. And then we took off again, right? Deeming this right here as a potential balanced price range. Then we came up, and lo and behold, what did we do? We took out some buy side that we left, right? This right here is an official breaking market structure right there, right? Shifting sentiment, breaking market structure. Everybody know how I see the difference between the breaking market structure and the shifting sentiment. If you don't know, this high took out that low. That gives us a breaking market structure, right? That gives us an official breaking structure because this high took out that low. Now we've come back and taken out that external liquidity, right? Consolidated. And then we came here and did what? Took out some more buy side liquidity. So now, when the bad news come out and brought us all the way down to here, what did it do? We came down to that imbalance, wax on. We came down to that imbalance, wax on, right? Now, what do we have left down here? A whole bunch of wicks. What is this right here? A balanced price range. What is this right here? A balanced price range. Now, what am I anticipating the market to do? Bounce, right? Get back above this, hit this, act as resistance, hit that, act as support, get above that, right? Maybe even pause right here at this consolidation, right there at the consolidation, act as support. Take out a new high, fill in these imbalances over here. That's what I would be expecting the market to do if some bad news came out and just pushed the market down, right? And why would I expect that? Because it's all about what has price done and not done. We know what price has done. We get some manipulation in with some news. What did that news do? Filled in that fair value gap, stopped at that order block, stopped at this mitigation block right here, right? Depending on which low you're looking at, this right here could be either a mitigation block or a breaker, depending on which low you're looking at, right? Because if you're looking at this entire price leg right there, if you're looking at this entire price leg right here, right, that will be a mitigation block. If you're just looking at this piece of the price leg right here, that would be a breaker, right? Because you got this look consolidation there with these 1, 2, 3 candles. They consolidated right there, and then that high came up and broke below that consolidation. So if you're looking at that piece of the price leg, that'll be a breaker. If you're looking at it all the way from this low right here, that'll be a mitigation block. But either way it go, what's their job? Stop price. Send it the other way. I feel like I'm in my bag tonight. We're in the same boat. I watched the videos, but didn't fully grasp. We all do. We just got to keep looking at them. ICT got me looking at because it's inverse to the. Okay, that's what's up. We can do this. We can regroup for sure. What you pointed out about how to find breakaway gaps, I noticed about 4 times a day, and I was able to use it a couple entries. Appreciate that. Hey, that's what's up. In the videos, he break it down. He break it down good. Like I just can't remember it right now off the top of my head when he talk about the breakaway gaps and the measuring gaps and stuff like that. It's one video where he break it down real clear. I think it's the Bill and Bridges video. Can't remember, but he break it down real clear. But like I don't be using all that extra stuff. You know what I'm saying? Cause I don't, you know what I'm saying? I don't be using all the extra stuff like that, like the breakaway gaps and the measuring gaps, all of that. I just use my field projections. The field projections is way easier to me than to try to worry about, is this a breakaway gap? Is this a measuring gap? Now look at the Pangyan leg, measure the Pangyan leg, get my target, measure the entry leg, get my target. I'm done. What about the 1005 Bitsy that took buy side of the 955 candle? Is that a fake out since the Bitsy did create a hold on. Man, you can't be putting these dissertations in here, man. Y'all know my reading don't be reading. Said the 1005. You supposed to pull up with them kind of questions when I first start, man. 1005. Okay, so 1005 Bitsy. Let me get all this other junk off the screen. I'm starting to sweat too. Okay, 1005 Bitsy. Got it marked. What about the 1005 Bitsy that took buy side liquidity 955 candle? Is that a fake out since the Bitsy did create a fair value gap? What? What are you asking? Hold on. What about the 1005 Bitsy? Okay, that took out buy side from the 955 candle. Okay, right here. All right. Yeah, I see. I'm looking at it over and over. I ain't understanding what you asking. You saying, is that a fake out since it did create a fair value gap? Is what a fake out? Like what do you mean? Is what a fake out? Since I don't understand what Lil Hawk trying to say, I'm just gonna walk through it and explain it the way I see it. Oh, I thought price would continue up. Okay. Now, he said I thought price would continue up. Okay. Let's we're going to all right, let's do this right here. I'm going to put a line this way. I'll put a line this way so I know that's the high. All right. And then I'll put a line this way so I know that's the low. All right. So I know that's the high, that's the low. Okay. Man, I'm like, well, I don't went too far. Okay, that's the high, that's the low. Okay. I'm just coming back here to get some context. Right? I'm coming back here to get some context of what's going on. All right, move this stuff out the way so we can't see what's going on. All right, come back here to get some context clues. All right, so all right, so price came down. We took out sell side there, pushed up, pushed up, pushed up, boom, failed to take out the buy side. All right, so we got a failure to take out buy side here. All right, then we came back again. We push up, we failed to take out that buy side. So we're going to put this here, but this time I'm going to make that dotted so I know that it failed to take out the buy side. All right, so pushed up, breaking market structure here. All right, breaking market structure there. Breaking market structure. What's up, Hefe? What's up, Hefe? Talk while I'm drawing. Hefe. Hefe. Hefe, I'm about to kick you off the stage. All right. Bullish fair value gap. All right, Hefe. Gave you a chance. You gone. All right, bullish fair value gap. Consolidate. We done failed. All right, so consolidate. Just give them a context together. Okay. Wait a minute. All right, so we got all our context clues together. Right, so coming from back here, we took out sell side, breaking market structure to the upside, made a fair value gap right here at this breaker. We didn't mark out the breaker. bullish breaker. I'll put it all the way over to here. Putting everything over to there because that's where it ended up dropping. Oh. All right. Okay, so all the context clues are in there. Right? All the context clues are in there. That's the sell side. There. Oh, we got some sell side right there too. Oh no, that was the low down there. That was the low. That was the high that I want to remember. Okay, so the low and the high, I want to remember right there. Sell side. Boom. There we go. All right, now let's go back down to the 5 minute. We was on 5 minutes, right? Yes. 5 minutes. 10:05. Right there. Over here. There you go. All right, so now we're on the lower time frame. 10:0. Nope. Here. All right. Nope, we need that because we need to know it's a busy. All right, right there. So here we go. All the way. It's a busy. Every day. Okay, so here we go. Blah, 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 blah. This is all our context clues. And we're going to zoom in. Right, we're going to start at 9:30. 9:30, the market just opened right here. Mark, come here. Market open right there. There we go. Make the candles big. Okay, so 9:30, that's the open. Let me dim this down so you can. Still can't see the wicks. So I'm gonna move this over here. So I know that's the open right there. Still can't see the wicks. All right, so that's the 9:30 candle right there. So 9:30, we open up, right? So 9:30, we open right here. Right, we open there. This is the 9:30 open. Put that there. Right, so we open up and we come down and we immediately take out this sell side right here. All right, so we take out sell side there, short-term sell side. All right, so we immediately take out sell side. We wick up. All right, we start consolidating. All right, start consolidating. Push up. Take out buy side right here at the open. All right, make sure that's right. Yes. Take out buy side right there at the open. Come back down. Boom. Take the buy side out. Right. Come back. Take. Oh, I need to leave that there. Right. Come back. We take the buy side out right here. Right. Take out the buy side. Keep pushing up. Take out the buy side again. We're continuously taking out buy side, buy side, buy side. All right. Take out that buy side there. Take out a new high. Take out a new high there. We come back up to. come up to a bearish fair value gap. Right, come up to, push out, take out the buy side, took buy side out, hit bearish fair value gap, boom, reject down off of it hard, come all the way back down. Right. Past consequent encroachment of that wick. Right, consequent encroachment of that wick. Open the next candle, come back down, fail to take out the buy side, the sell side, come below these equal lows here on the 5 minute. So we take out those equal lows on the 5 minute. We're going to mark that because those are equal lows, magnet for price. Take out equal lows on the 5 minute, come back up, push back up, take out this right here. So we've come down, taken sell side, delivered to buy side, hit a premium PD array, come down, taking sell side, delivered to buy side. Right? Now that we've delivered to buy side. Now that we've delivered to buy side, make sure we and we've just come to again a bearish mitigation block. All right, so coming down again, consolidate, market opens up, immediately takes our sell side, right, comes back, delivers the buy side, sell side, buy side, complete, hit a bearish fair value gap in the bottom of a mitigation block, comes back down, takes out sell side, immediately delivers back to buy side, sell side, buy side. Job done. We're inside a mitigation block, right? Respects mean threshold of the mitigation block. Wicked all the way up to the top portion. Let's go down. Let's drop into the lower time frame to see what we reacted off of over there in that area. Let's go down to the 1 minute to see what we reacted off of in that area. And on the 1 minute, we came up to a volume imbalance, a 1 minute volume imbalance right there inside a breaker. We got a 1 minute breaker with a 1 minute volume imbalance with a 1 minute fair value gap. That's what we stopped at, inside a mitigation block. So we got a 1 minute breaker, 1 minute volume imbalance, a 1 minute order block, right? 1 minute order block because we took it out and we went low. It's not a breaker. It's an order block. 1 minute order block. We went up, took out that high and dropped low. So we got the 1 minute bearish order block. We got a bearish. Well, this is a breaker right here. This is a bearish breaker right there. But I was looking at the bullish order block, right? So we got the bullish order block and a bearish breaker right there. I just noticed that bearish breaker here. The right there. That's the bearish breaker there. Right. Got the order block. We got the volume imbalance, and we got the fair value gap. So bearish breaker, bearish order block, bearish volume imbalance, bearish fair value gap. All on the 1 minute. That's where we stopped. That's what price stopped at. On the 1 minute. Now go back to the 5 minute. I know Lil Hawk like I ain't say do all that. Boom. No, we need to, yes, we know it's a fair value gap there. So boom, we came up, we stopped there. Then the next count after we hit that and rejected off of it, right? We rejected off of it. Then we came here, pushed up, took out this buy side. After hitting that right there, came up, took out this buy side, took out the buy side, right? Took out this buy side right there, rejected off of it, came back down inside all of those PD arrays, bodies respecting that. Next candle, pushed up, took out the high again, failed to get these equal highs, came a stone's throw away from this volume imbalance, right? Rejected off of it again. Body was still respecting that bearish breaker right here. That's that bearish breaker right there. Body still respecting that bearish breaker right there. Then the next candle pushed up. Did we get consequent encroachment of that wick? Didn't get consequent encroachment of the wick. If you can't get consequent encroachment, that's showing what? Exceeding bearishness or exceeding bullishness, right? We're wicking, right? Wick, respecting the bearish PD raise. Wick, respecting the bearish PD raise. Wicked, respecting the bearish PD raise, right? Right? We're taking buy side, wicking down. Taking buy side, wicking down. Respecting these PD raise. Get back up. Can't even make it to consequent encroachment of this wick. Then it gives up the ghost right there. Now, one other thing we can look at before we give up the ghost, let's look at the dollar and see what the dollar was doing during that same time. All right. So during this same time, as we were coming up to this destination, as we came up to these PD arrays, let's go back, right? We came down, we made this lower low right there. The dollar is squeaked out. It squeaked out a higher high. So, but we made a deep lower low there, but we barely squeaked out a high, right? That's showing something might not be right. Stretch this out so it'll make sure I want it to look right. All right, so came here, made a lower low, right? Coming from there. Oh yeah, we made a pretty decent high there. Coming from this. Oh, let's come from these right here. So from these here, give it more time. We're going for more time. From them lows that we took out, when we took out those lows, right there, coming from there. Yep, okay, that's decent. That's a decent move, right? Coming from there. Yep, that's a decent move there. When we made this extremely low right there. Bigger low than we made a high. All right. Then something was wonky going on here, right? Right there. See how these candles here? Something wonky going on there, but nothing to write home about. We in a tight range, right? So now the dollar, right? It's starting to run up. The dollar running up. But look at the ES barely coming down. This high right, this low right here, right? That the ES struggling to get to. Look at the high from the dollar. The dollar blasts through that high. Divergence. This low, this big low the ES made, this high the dollar made, the dollar blew through. But the ES struggling to get there. Divergence. Divergence is in the midst. Right? So now here we go over here. After we move on past the dollar, the ES starting to push up, making higher highs, right? The dollar is still diverging. It's a cracking correlation. The dollar is showing weakness, right? It's a cracking correlation. The dollar is showing weakness. The dollar blew through here. The what's the name was showing like strength. The dollar showing like blasting up. It's a cracking correlation, right? So when you start seeing a cracking correlation, when it comes up to a destination, right? You start looking for clues of what to do, right? This right here is rejecting, respecting, showing weakness up here, cracking correlation, right? Then look at there. Look how they drop. And look at there. Then the dollar going down with it, right? Cracking correlate. That's a cracking correlation. But look at that right there. Look at that drop that you got. Why? Because it was showing divergence right here. And we came up to, took out some buy side. And once we took out that buy side, we dropped down, right? Start coming below these lows. And if you go to a lower time frame in that same area, go to a lower time frame in that same area, after we get that cracking correlation, right there. There's your breaking market structure after your pang out right there. Came back up into that area. I can't remember what we marked that out for, but we came back up into it. Institutional order flow entry drill right there. Then drop. Then drop. But like I say, it's easy to go back and look at it in hindsight, but that's why I like to go back. That's why I like to put it out of sight and just look at what the market did, and then just go through the price. That's why I like to know everything, so I can just go through the price and see what the market did. And again, when you be watching it, always look for that cracking correlation between the indexes, the 3 indexes, and the dollar. Yeah, we took our buy side over here. We took our buy side a couple times. It did not continue up because price closed in the that's not true. Caden, that's not true. It don't matter where price it don't matter where I hate to say it don't matter where price closed, but it didn't continue up because it closed inside the busy. It didn't continue up because it had delivered to the opposing liquidity, and then there was a cracking correlation. That's why it didn't continue up, right? The market is always going to seek liquidity and then seek imbalances, right? It's going to seek liquidity and it's going to seek imbalances. And then while it's seeking liquidity, it will engineer liquidity or suck people in. And like I was saying before, right? If you look over here, right, when we first opened up, we immediately took out sell side. And then we came back and delivered to buy side. So that's taken, delivered. That's completed, right? Taken, delivered. It's completed, right? So then we came over here, right? And we pushed up and we took out buy side, right? We took buy side, hit a premium PD array, came back down and delivered below sell side, right? It was internal sell side, but we took it, we delivered it. Buy side, sell side, right? So completed. All right, that's completed. So once we came up, right, we took our buy side here, right? Respected the PD array, came up, right? We started to consolidate right here. We've taken out buy side right there. We've taken out buy side here again, starting to consolidate, right? We hit this bullish fair value gap right there, right? And we pushed up and we took out buy side again, and then we wicked off of it, right? We wicked off of it, right? Took our buy side again and we wicked off of it. We consolidating. So what does that long wick mean? that means, right, we're accumulating short positions because the candle was going up and then it wicked down, meaning we got a whole bunch of short positions that was accumulated because the market sucked back down, right? A whole bunch of big boys buying and it sucked, selling and it sucked back down. Once the big boys go short, right, where do they want to offset? At sell side, right? We went long, we offset at the buy side, right? We went short, we offset at sell side, right? Anybody that went long down here, right? They offset up here. Anybody that went short up there, they offset down there. Sell side, buy side, sell side, buy side, sell side, buy side. So it don't matter if it closed inside the PD array or not. That ain't what the cause is, right? The equal lows, yes, that's a draw, right? That's a draw. But when is it ready to go there? That's the thing. That you got to use the other context clues to figure out when it's ready to go there. And that's when, like before, and I was like, hey, let's drop lower and see where we went. When we overshot the 5 minutes and we go look in the 1 minute, we hit breakers, mitigation blocks, volume imbalances. We hit all of that stuff over there on the lower time frame to give you some context to that big 5 minute candle. First time in the chat, I don't know what I was doing. Every day. It's what every day. Welcome. You would catch on. It's what every day. Again, that's just for sup mate, just saying hey. Okay then, Hefe. That's it, man. I've been on here for 2 hours. I'm sweating. I'm tired. I don't care if somebody got something right now. I'm out of here. I don't care if somebody got something. I don't care. I'm thirsty. Hey, man. Y'all know what time it is. Don't put off till tomorrow what you can say today. Let your loved ones know that you love them. Call your parents, tell them you love them. Call your grown kids, tell them you love them. Don't put off till tomorrow what you can say today. Don't just say it. Don't just show it. Say it, show it, and confirm it. I appreciate y'all for hanging out with me, man. You ain't got to go home. You ain't got to go home. But guess what? Hey, I'll see y'all in the morning at 9 o'clock for the overnight price. Action. Gone.